Hello, wonderful people of Web3. We are live once again from Voice of Crypto on Voice Out Wednesdays with VOC. And today I'm going live with a really special gentleman. We have Caspar Sauter, and he's going to talk about his journey from traditional finance to decentralized finance. And we're going to talk about a lot more shortly. We're waiting for a few more viewers to join, and then we shall start in less than 2 minutes. How are you doing, Caspar, in the meantime?
Doing doing great. Thanks for having me. Pleasure to be here. Excited for the
The
show.
pleasures are, yes, really excited for the show. And our viewers love our show. They love the content that we do. And usually the guests that we get in talk about how they got into the space, their journey in the Web3 space, and all about the Web3 blockchain and decentralized finance space. And thankfully, we have someone like you today to decode a lot more about this space. And without further ado, let's just start this bombarding session with Caspar. Thank you so much once again for joining us today on Voice of Crypto's Voice Out Wednesdays, where we get renowned guests from the Web3, blockchain, and crypto space to talk about their journeys in this space. And we recently started something called Voices of Web3, and Caspar, you are one of the voices of Web3. So glad to have you here on our show today. How are you doing?
Doing great. Beautiful Wednesday. What more do you want, right? So happy to be on the show. Thanks for having me.
Absolutely, absolutely. So, if we go ahead and read about you on LinkedIn, you've been an economist for as long as you've been on LinkedIn, I suppose. But your journey from traditional finance to decentralized finance is something that interests people. So, if you could talk a little bit about what you're doing at the moment in the decentralized finance space and how your journey from traditional finance to decentralized finance sort of panned out.
Of course. So by trade, I'm an economist. I did a PhD. I did research at different universities. I used to do research at the UN. I then somehow ended up in finance. At the end at UBS, where I built up teams in Europe and Asia, focusing a lot on risk management in banks. And now my journey to DeFi started a few years ago. I was playing around first as a user with different protocols during DeFi summer. I was absolutely fascinated by the possibility to build incorruptible financial machines. So I started to look into that more seriously. I started to consult different protocols on risk management aspects, on financial engineering aspects, together with my current co-founders of what is DDX.exchange. So DDX.exchange, we went in that endeavor full-time last year. What we build is an institutional grade derivative DEX, starting with perps, adding options next year. And we built that as a white label solution. So my journey from academic researcher to co-founder in a protocol, that's kind of it in like 1.5 minutes summarized. But I'm happy to deep dive into any aspects.
Yes, so if you could talk a little bit more about D8X, very interesting name. Firstly, where did you coin this particular name, and what does the firm exactly do?
So, well, the DEX, it's kind of,
Ah, of course, I see the
an play
connection.
we we see there.
The clear
So
words.
maybe let me track back a bit. So if I look at, for example, Switzerland right now, if I look at Europe, I see more and more very traditional players entering the space. So you had like recently two state-owned banks out of Switzerland, retail-facing banks that entered crypto as a custodian. They offer crypto trading solution to their clients, etc., etc. So we believe that this trend will get stronger and stronger.
Yeah.
Now, we also think that being able to build decentralized financial machines is absolutely crucial. I think personally there are benefits from a society point of view, but there are also benefits for individual organizations. So what we offer is basically a full-fledged DeFi product, completely decentralized, fully on-chain, that can be used by different players, including those very traditional players that enter the space. Our first version that will become live relatively soon has what we call institutional grade perps. So we offer linear, inverse, and quantum perps fully on chain. So you can trade, for example, Bitcoin USD collateralized in USD, collateralized in Bitcoin, or collateralized in Matic. And we offer that as a white label product. So that means let's say we have different ways of how you can white label the exchange. A very DeFi native way to do that is a big shout out to Liquidity at this point is to use our front end repo. So we have, like similar to what Liquidity is doing, we have a soon to be open sourced front end repo, which contains a full fledged front end that anybody can fork, brand, and host. So you could spin up Voices of Crypto perps in like 1 or 2 days, kind of seamlessly. So what this does is it creates a gateway to the exchange engine, which we will deploy on Polygon CKVM first. Then other ways you can white label us is you can use our APIs and our Node SDK. So let's say you are a more traditional player. Let's say you are a centralized crypto broker. You have a spot business running. You don't have perps, or you want to give your user exposure to decentralized perps. You can use our APIs and Node SDK to plug in us into your app. Or let's say you are a wallet, right? Your users have spot positions in your wallet, and you want to give your users the opportunity to temporarily dollar hedge their spot bags, right? So what you can do is you can add like a button, hedge my spot bag, and what happens in the background is you basically open up a short inverse perp position on the DEX. Your users don't necessarily see that, but it's kind of a cool feature that you can offer. So we are all about collaboration with other protocols on the DeFi side, offering a very seamless way to tap into DeFi for the more traditional players that are coming into the space.
Absolutely. So you mentioned about this transition that is happening for a lot of firms, not just in Europe, but across the globe, where traditional finance firms are sort of moving from TradFi to decentralized finance. How is how are you, Caspar, sort of perceiving this trend in Europe, and how exactly is D8X planning to monetize on this shift?
So I mean, firsthand, I'm seeing that where I'm based, which is Switzerland. So there, what you see is you have relatively clear regulatory guidelines, which enables more traditional players to come into the space. Already today, you have different organizations that have a banking license from the Swiss Financial Market Regulator, FINMA, that operate in the crypto space. So you have full-fledged digital asset banks like Signum or Seba Bank, which already are operating today. What I've seen over the past months, specifically here in Switzerland, is more and more, sometimes even state-owned banks. So in Switzerland, it's tiny country and has even tinier sub-entities called cantons. So you have cantonal banks, so banks owned by basically sub-states. And those banks are entering crypto. So which to me on first sight was kind of surprising. So I think this movement will continue. And I expect that at least in Europe, you will have the large majority of the banks offer at least some sort of crypto service, maybe just custody, maybe just some sort of trading service to customers. Now, where we come in is through our white label solution. So we strongly believe that decentralized solutions make a lot of sense, and we want to offer those very, very centralized counterparts a simple way to tap into them. So that's why we develop white label solutions, we open source them, and we are talking to some of those players that are entering the space.
Got it. So you spoke briefly about what the situation in Switzerland is and how it may be it's easier for Web3 firms to function there, and in fact the government is sort of, if not pushing it, they are on board with the idea. But what exactly is the situation in Europe? we already know that Mika came into force some time back, and in terms of the regulatory aspect of it, there are some strides that we have made as a sector. What is the ground reality in Europe in terms of adoption, in terms of how entrepreneurs are moving towards adapting to this technology, or even sort of offering the right kind of products? And is there the right kind of audience in Europe? What is your stance on how the technology itself is growing in these aspects in Europe?
I think in general, I'm relatively optimistic about what is being done. For DeFi, Mika is not bringing too much clarity, to be honest. So this is still something that I would say is improvable, but it at least you see that there is a relatively comprehensive regulatory framework that is in place, which you cannot say about other jurisdictions right now. So from that side, I think Europe is relatively well positioned. My personal feeling is that jurisdictions like Singapore are a bit more dynamic. If I've seen you doing interviews at Token 2049, I mean, the channel vibe there was extremely positive, right? So I think when it comes to building businesses and more importantly, financing them, getting liquidity, etc., I think Asia is ahead of Europe. But in general, I'm very optimistic for both Asian jurisdictions and European jurisdictions. And out of Europe, I think a good place to be is Switzerland. Because you're not formally in the European Union, you have your own regulatory framework, and you have a regulator that can be pragmatic at times. Not always, but at times.
Yeah. More optimism there, I'm sure. I'm sure that DeFi as a sector, DeFi has taken quite a bit of strides. I mean, where we were 2, 3 years back, and now, even though we're in a bear market, on a large, there is more adoption that the DeFi sector saw. However, there are still a few gaps, and I think there's still some work that needs to be done in terms of just financial management or regulations, or even tech development. What is your take on that? Where do you think that DeFi as a sector sort of still has more room to grow?
I think financial risk management is definitely something we have to do our homework on. So a lot of this space has been built very quickly, and a lot of the builders have a software engineering background, which results in great software. But sometimes you might overlook some of the financial aspects of what you're actually building. So I think on the risk management side, there is a lot of things like many of the problems we are seeing right now, they have been met in traditional finance as well. So there are attempts that try to tackle them. For example, so if you are a borrowing lending protocol and you accept specific collateral, right? So you might ask yourself the questions: what happened if your client needs to be liquidated, and what happens if every borrowing lending protocol needs to do that at the same time, right? What if you have some sort of crowded trade situation, at which point every protocol tries to unwind the same collateral? Like the curve example we have been contemplating a few weeks or months back now. So these type of questions, you have partial answers, or at least risk management strategies that exist in TradFi, which are sometimes done in a rather freestyle way in DeFi. So I think that's one area where we definitely can improve. At the edX, we try to kind of bridge the best of both worlds. So we thought a lot about how to balance the financial risks embedded in the system, and how to test them as well. So tools that also companies like Gauntlet are offering, where you can actually stress test the system that you're building, they make a lot of sense, right? And I think that's something where I see us moving towards. I think we have to over the next time frame, unspecified, rather sooner than later, I hope. So that's definitely something that is important. The financial engineering part as well, but I think there is movement. So you see more and more people that worked in financial engineering at traditional players that are now moving towards crypto. So I think that's a development that I'm seeing. I mean, including us, right? We are coming from a rather traditional background and are now building fully decentralized protocols. So yeah, I think these two developments are needed to make the next step.
Absolutely.
And then maybe on the last side, so we don't touch RW real world assets on the DDX side, but I think as soon as you do, you will have a lot of other questions that you need to tackle, regulatory compliance, etc., which is something which DeFi is not used to do. Now you might argue whether or not we should do that as an industry, but if you want to do that, then you have a whole bunch of new questions to actually think about and tackle properly.
Absolutely. A big part of how we grow as a sector, I think, is institutional development or institutional players sort of entering the DeFi space. And how do you guys at your firm prep for, let's say, institutional grade products? Or how far do you think we are as an industry in terms of institution sort of migrating from centralized or traditional finance to DeFi?
So we're not yet there, I think. But I mean, there always has been some sort of interest from an institutional side. I believe, I mean, I bank on that to grow. And I think we focus in the sense that we build white labeling products. We focus on that as well. So we explicitly believe that if those institutions actually enter DeFi, if they come on chain, they rather should use truly decentralized products than something else. So we want to offer them a very competitive product that they can then basically give to their users to use, right? So that's the whole idea behind white labeling. Now, this is not always simple. You might need to compromise on some points, and these type of questions we are looking at. But yeah, so I think in order for institutional adoption to really happen, they need regulatory clarity. As a fund manager or as a bank, you will not be able to do anything without regulatory clarity. And then they need attractive products that they actually can use. And typically, like smaller institutions, they don't build products from scratch. They usually go for some sort of solution which they buy. That might be like, for example, a white label solution. So if you build DeFi products such that any type of stakeholder can actually use them, including institutional stakeholder, I think you are on the right track. Well, I hope, because that's what you're doing. So, yeah.
True.
But I'm cautiously optimistic, let's say, when it comes to institutional adoption. The big question mark I have is what happens in the US, which is for me difficult to judge. But aside that, I'm cautiously optimistic.
Absolutely. So, from an economist's point of view, where do we stand in terms of regulations, and which geographies, let's say, are a little ahead of the other geographies? This is going to be like a 2-3 part question. So, let me just align all of that. Where do we stand? What geographies are ahead? What geographies are sort of behind? And what role will regulations play in the growth of this space? We've already spoken about, and you just in the last question mentioned how integrating institutional players into the space will also require clearer regulations. I mean, you've already touched upon that, but apart from that, what role will regulations play in addition to the first two questions that I asked?
So where we stand, so the US is a big question mark. Most of the projects I'm talking to, they don't plan to either stay in the US or try to build for US residents, including us. So let me leave the US beside. I know that in Switzerland, I know very well because we are based here. So there is a relatively pragmatic approach when it comes to DeFi. So I think a key point that the regulator should understand is that regulating like truly decentralized protocols is different from regulating a centralized counterpart. So if a regulator understands that, I think that's a big win for us. So if you have a different set of rules for organizations that have custody of user funds as compared to organizations which are truly, I mean truly decentralized in the sense that the core team cannot really touch user funds or cannot really influence any ongoing transactions, that's a big win. And as of now, the existing guidance in Switzerland seems to point into that direction, which is positive. Then we are also looking very optimistically towards Asia. For example, in Japan, you have the law that enables Japanese banks to create yen-based stablecoins. I think they passed that like in mid last year, and you have now the first banks that actually start to implement that. This is interesting, right? So you have bank-based yen stablecoins that can potentially be used in DeFi, right? So these type of so you have a regulatory framework, and then a product that you can then work with. So this type of developments are interesting. Hong Kong is an unknown for me. So I mean, everybody has high hopes for the developments there, including ourselves. But it's still, I mean, to some extent, a black box for how it actually works. I know that some of the Swiss-based banks, they like Signum, for example, they are applying or already obtained a license to serve those that jurisdiction. So that's interesting. From a DeFi point of view, I don't know. No, I don't know enough. Now, but I think so. As soon as you want to have a real world interaction in DeFi, so as soon as you want to have either like a T-bill backed product or a product that needs real world assets, you have to ultimately rely on national regulations. So that's for your second question, one connection that you cannot get out of, because ultimately you need to settle claims in court for these type of assets, right? So this is, I think, if you want to grow crypto or DeFi to the next stage, and you want to embed real world assets as collaterals, for example, as let's say yield bearing collaterals, then you will have to deal with regulations, and for that the regulatory frameworks need to be clearer than they are today. So this is a bit double-edged sword, right? So you will lose some of the appealing properties that DeFi currently has, or at least in theory currently has, and yeah, but I think that you will see some sort of convergence between what you currently see in TradFi and what exists in DeFi.
Understood. Apart from the regulatory issues, there are still quite a few pertinent issues that DeFi as a sector faces, one of them being cross-chain operability. What do you guys at D8X do to sort of combat that and offer users low gas fees, or just the most convenient way out of transactions or moving assets?
Yep. So we raised a pre-seed round recently, and one of our investors was XLR. So what we do is we embedded XLR's interchain communication protocol into our smart contracts, which allows us to do a few things. On a potential token size side, this would mean we would have a chain agnostic token in case we would launch a token in the future. On the liquidity side, we are looking at options to basically get synergies between chains where we potentially would launch. So we're thinking about ways to make liquidity pools shared. So that's, I think, a big thing. that would combat the fragmentation that you currently see in the liquidity landscape, also for within a given protocol. Now, there are neat, let's say, tools like Squid, for example, which help to bridge collaterals from A to B. So this is a very, let's say, user-friendly option to kind of mitigate to some extent the cross-chain issue. So that's something which we're also looking at and will embed for our white label partners out of the box. So you basically can bridge collateral. We have a collateral pool specific architecture in the deck, so you can collateralize your trades in different collateral currencies, for example, USDC or ETH or Bitcoin. Doesn't really matter from a systems point of view. So you can bridge those assets from different chains using Squid going forward. So these type of solutions are, I think, crucial. But figuring out a smart way to share liquidity across pools, across chains, is interesting. An interesting problem. To do that in a safe way. I mean, there are different ways to do that, but to do that in a safe on-chain way, this is the tricky part. We spend a lot of time trying to think about how we build a system such that it's truly decentralized. We cannot fiddle around with user funds, which for us is the yardstick. And that also applies to any potential cross-chain solution that we have to take.
Okay.
Which makes it harder.
Yeah, it's a tricky arena without a doubt. You're an economist, and I also read somewhere on your LinkedIn that you're a master of stakeholder portfolio management, if I'm not wrong, or stakeholder management. So in the crypto space, people are always looking out for new tips and tricks on how to sort of manage their portfolio. We know how the numbers, how the CPI numbers pan out and sort of affect, if not, I mean, it's not for sure, but still the global socioeconomic situations sort of do have an impact on the crypto market, which is still a lot volatile than we'd like it to be. So, what are your top sort of tips that you give to people who are just either starting to invest in the space or are amateurs about how to manage their portfolio? What sort of allocation should they have for riskier asset class, like let's say crypto, and versus something that's more balanced?
It's for me, it's a function of time. So it really depends how much time you have to look at your investment decisions. If you try to play crypto from a retail investor perspective, you need to spend a lot of time and to be really immersed in order to stay up and actually play the game. So I personally don't have that time, right? So I'm basically busy building together with my co-founders. So I'm doing a very boring long-term strategy for myself. So I look at like the obvious plays, blue chip, crypto, stable coins, I think have a decent potential, and don't do any like short-term trades right now. So my number one advice would be to invest as a function of the time you have to look at your investment choices. So if you don't have a lot of time, there is a high probability that you will get burned if you try to play every alt that pops out on crypto Twitter. So this is probably what served me best in the past. Now I used to work with financial models. So I used to look at models that predict financial outcomes, and all those models, they are essentially rubbish. So they don't work. They're terrible in terms of performance. So I'm very reluctant to give like long-term outlooks. But my personal portfolio has obviously blue chip cryptos in it that I strongly believe will work going forward. And I really, really would recommend people to decide based on the time they have. So if you don't have enough time, don't go into gambling alts on leverage and try to, you know. But then again, I mean, that's the investment decision. If you're a gambler, that's a whole different story, right? So then you're not investing, then you're gambling, and the picture becomes very different.
Absolutely, absolutely. We briefly spoke about the volatility in this space, and you very correctly said that if you don't have the time to actually be a retail investor, a day trader, don't get to it. Also, I would quickly like to say that none of this is financial advice, and please do your own research. The markets are really volatile. Moving on, since looking at the volatility of the market, we know that not particularly Bitcoin, but cryptocurrencies as a whole have been called the Wild West of the finance space. And how far are we from this narrative? I know for a fact that in the mainstream media, we're not very far from the narrative still. But in terms of numbers and just in terms of how the market has matured in the last couple of years, have we sort of done away with this name that we've been given?
Not completely, but I think you're on the way to get there. So if you look at the last cycle, even the idea of cycles, right? I think this is washed out a lot of projects, and I sincerely hope that this gives space for, like, let's say, slightly more mature versions of projects, and what remains is actually providing utility. But let's see. So I don't think the Wild West days are completely over, but the more you go towards more traditional use cases, real world assets, integrations with traditional finance, the less Wild West you will be, because you will be forced to do so, right? So there is no way that large institutional like capital enters the space if the space remains Wild West. So I think it's that the Wild West days are coming to an end, but they're not over by any measure, right? I mean, if you look around, that should be relatively obvious. But I honestly think that over the next few years, this will become slightly more boring as an industry as it used to be, simply because of the capital that enters.
Yeah, absolutely. As an entrepreneur, and towards the beginning of this year, even now, I think a lot of entrepreneurs, be it traditional finance, traditional space entrepreneurs, Web 2 or Web 3 entrepreneurs, they've been really excited for artificial intelligence and sort of integrating AI into their products or services. And just the boom that this sector, the AI or emerging technologies sector, saw throughout this year has been immense. Have you sort of explored the convergence of blockchain and AI? If so, how? And are there any future plans of integrating the same at D8X?
So we use AI to some extent during work, right? So as a tool. So that is a very useful tool. I think when you think about potential use cases on chain, there are a lot of hurdles to that. So I think a lot of the projects that try to do that, they try to sell you something which has inherent limitations and might not work, right? So there's a lot of speculation / hot air / pure shilling in this current interactions. I think an interesting use case could be portfolio management based on AI strategies. So these type of use cases are interesting. I know that some of the larger DeFi players are exploring to use AI to make DAO management more efficient. That's also an interesting angle. At DNX, we currently use it mainly as a tool. And we are observing closely what Maker and others are doing on the DAO front, which could be very interesting going forward. So that is something that is potentially interesting. Integrating it on chain, AI on chain. I mean, you have a slow ledger and you need a lot of data for training, any decent AI model. So it's not the most obvious marriage I see there, but yeah.
Absolutely. We're almost coming towards the end of our half an hour interview session, and the final quarter of this year has begun. What are your expectations from the market? Any year-end expectations? And once again, these expectations aren't predictions, just saying.
So I do have basically two expectations. So one expectation is that you will have a new perpetual futures DEX coming live and can be used, which is a very positive thing, I would say. Then on a more, let's say, macro scale, it's difficult. I believe we flatline until the end of the year. It's a wasted year in terms of price action for me, and I believe it will continue to be the same. But again, this is basically reading, like using my crystal ball to read into that. So I have a very bad crystal ball, I have to say. So don't take that up.
Don't we all? Yeah, absolutely. Any final words on the show today, Caspar?
I mean, no, thanks a lot for having me. We are very excited to get out with the DEX. So I hope you hear a lot about us going forward, and appreciating for being here on the show.
Absolutely. Thank you so much for joining us today. And to all our viewers, please go out and check D8X. Check out Caspar. He's doing some amazing stuff at D8X and a few other firms that he's found. So please go ahead and check him out. Check out D8X. Big shout out to you guys. And thank you so much for joining us today for this really insightful session. For anyone who's missed out parts of the session or wants to catch up with the entire session, we will be posting an episode on our YouTube. We'll be tagging you, Caspar, and D8X on that episode as well.
Appreciate it.
So keep watching out for that. And all the very best to you for the rest of this year. See you soon.
Likewise.
Thank you.